Okay, so let's understand one of the easiest tips for profitable trading. Now this tip isn't like a trading method like supply and demand, support and resistance, anything like that. It's just keeping your normal methods, increasing your bet size on different trades. Now before we get into this, I just want to give credit to Lance Breitstein. I saw this about a year ago and he made a very good breakdown on it. Most people don't really understand this. They do know it, but they just don't understand it because they haven't seen it broken down for them on a chart or a spreadsheet. So that's what we're going to do here today. So the simplest and biggest thing is just sizing up when the market calls for it. You can make as many mistakes as you want. You can have a 20% win to loss ratio and you can still absolutely kill it as long as you size up when the market asks for it. When I say this, I mean as in when there's a higher quality setup, usually they are a lot rarer, but when a high quality setup comes along, you don't just bet $1 as you would for a normal setup. Now let's classify our setups A through D. An A setup doesn't come often, but it's a great setup with good risk, good reward. Now on the other hand, there's a D setup, something that happens multiple times a day, every single day, but the risk to reward just isn't as great and it fails often. Now that we ranked our setups A through D, we'll essentially put more betting size on an A setup than we would for a D setup. So for example, if we put $1 on a D setup, we'll put $4, $5, even $10 on an A setup. Now when these A setups happen, you'll give yourself a massive cushion, or if you're in a drawdown and you're not profitable at the moment, you will actually come up into profit. Now doing this, you can essentially make more trades, have more times to be wrong, and still be profitable. Now we're putting more money into these A+ setups because we know there's a greater chance of them succeeding. Now that we classify that these A+ setups don't come in as often, my personal A+ setup is for an example, a supply and demand retest with either great buying pressure, great selling pressure, good news, or something along those lines. That doesn't happen as often as a D setup, which for me would be like a wedge break on the S&P 500 while Apple is holding VWAP or while all the equities are strong. Now a trade like that comes multiple times a day, but the probability of it being in my favor is far less likely. So now let's get into the spreadsheet side of it, where you can see the mathematics getting broken down and you can really understand the power that this has. So an A+ setup you can see is a 90% win rate. A D setup would be a 40% win rate. Your risk to rewards are 1, 1, 2, 4, but we're all risking $1 on every single trade, no matter how good it is, with equal bet sizes with the number of trades. Whether if you want to consider this a day, a week, or a month, an A+ setup would come in once, a B setup 3 times, a C 6, and a D 9 times. So if you think this would happen once a day, you can use this sizing for once a day or once a week, once a month. At the end, if we were to essentially use $1, we would make $5.60 at the end of that time. Now, if we sized up for an A+ setup, we're going to bet 4 instead of 1 and gradually move down the list as the tiers of the trades go down. Now, instead of making $5.60, we're up $23.30. Now, however you trade, this example works for once a day, once a week, and once a month. Just showing the difference between an equal size bet and a linear size bet, the gains are over 400% different. Now if we were to go really aggressive and say a D setup is a $1 and an A setup is a $10, taking that one setup would make up for everything. And the aspect is you can take over 170 D setups, lose all those times, all that money, and one A setup would make up for it and you would end up being profitable. So now this one, we can consider one contract, one lot, 100 shares, 1,000 shares. You would just have to do the math for that. So now if we move from linear to aggressive, you'll see that instead of making $23 being linear, you would now make $46. So now if you're not fully convinced, let's add some more bad trades in there. Let's say instead of 9 D setups, you're going for 90 D setups. Now you just turn from a profitable trader to an unprofitable trader, if the bet size stays the same. Now, not even using the aggressive size, but the linear size, you now turn profitable all over again. So now to break it down here, if you were equal size betting with massive losers, you'd be down $10.60. But if you did just the linear size bets, you'd be up $7.10. Now let's put this into a real money context where an aggressive bettor on a D trade is now risking $100 and on an A trade he's risking $1,000. That little $46 example now just turned into a $4,600 P&L. If they did only equal bets, they'd be up $560 instead of $4,600. Now let's recap this. Let's say our D setups are 90 trades instead of 9. We add real money to the aspect. Trading with the same bet size, we would now be down $10,600. Whether this is on the day, week, or month. This is absolutely horrible. This can make or break your trading career in the beginning. Now with everything the same, if we just increased our bet sizes, not even aggressive, just linear, we are now up almost $20,000. This is an absolute game changer when it comes to real money. Now let's add it all together. From the beginning, we shall start with figuring out and recapping our trades. What are our highest probability setups? Once we do this, we shall rate our trades from greatest to least probable, A through D. Now we size up linearly. We put more capital on a good setup, aka an A+ setup, than a D setup. Now an aspect to stay away from is sizing up too much that it gets into your head and messes with your emotions. Also, along with this, you make sure that sizing up doesn't mess with your risk to reward ratio. Another tip you can use is sit and wait for your great setups, especially if you have a small account, if you're trading under the PDT rule, or if you're not in margin account and you have under 25 grand. Taking those option contracts or whatever, the stocks, whatever, will mess with your abilities taking all these D setups when an A setup is maybe right there. 5 minutes away, 10 minutes at the end of the day, and then you watch it happen, but you can't take it because you don't have capital. And now at the end, if we just put it all together, we journal our trade, this can turn you from just profitable, just getting there, to extremely profitable. Maybe it's even to the point that it's going to finally be able to take money out of your account and pay yourself. Maybe take your account to that next level, or even turn you from unprofitable to profitable with just the same strategies, just scaling in and out differently. Now I hope I explained this all good. I hope you all understand it. I would appreciate a subscribe, a like, following any of my social medias. I'll have them all linked down below. I have a master course, a supply and demand course, even a Discord and a free Discord. All my links will be down below. Everything's in my Instagram also. Thank you for watching.